important because it's sort of the last leg before a very, very big global event which will have ramifications for days to come. The FOMC meet will end today. You will see 11:30 p.m. India time the decision that the Federal Reserve has taken, and it's likely that they will start cutting rates finally after March 2022. So that's the nervousness you're seeing over here. Let's pull up the heat map as well and give you a sense of what has been happening in the markets today. I mean, I would say from the start of the day, the theme has been very clear. Banks are up, IT is down. That seesaw continuing, and very, very sharply on the lower side are your entire IT companies, set of IT companies. Will the mood change if there's a 50 basis point cut from the Federal Reserve tomorrow? I'm not sure, but at least for now, TCS really taking it on the chin. Some of their commentary about their second quarter has been less than exciting for analysts. That's hurting them. The entire pack also down because of commentary coming in from Accenture, the world's largest IT company, really saying that they're postponing pay rises for another 6 months based on their outlook. And that is being seen as a sign that demand is going to continue to be soft for a lot of Indian IT companies which focus or are impacted by the way the US economy and the demand there moves. That's bad news. That's why you're seeing TCS, HCL Tech, Infosys, Tech Mahindra, Wipro all in a row there, really getting hit quite hard. But on the other end of the spectrum, of course, you have the banks saving the day. Shriram Finance, complete rocket today, doing very, very well, nearly 5% up in trade. The Bajaj twins back in favor after losing some steam yesterday, in part thanks to a brokerage note which has been very bullish on Bajaj Finance. So Bajaj Finance and Finserv, both the companies doing well today. ICICI Bank, HDFC Bank, I mean, in a sense, the return of the private banks, with SBI also not half bad, 1% up as well. Let's just pull up Nifty contributors for you, and you get a sense that this would have been an uglier picture as far as the index is concerned if not for the heavyweights really coming in. And HDFC Bank, really, I mean, all the glory going to Bajaj Finance today, but HDFC Bank is really the savior this afternoon for the Nifty overall. I'll just pull up quickly advanced decline ratios before Hersh comes in with what's happening on the broader end of the spectrum as well, because you can see the pain there. Nearly 1:3 is decline to advances to decline, and that gap widening. So buckle in for what could be a pretty rough ride over the next 1 hour, Hersh, as markets try to figure out what to do. I would say the Bank Nifty, the only outlier, and that's spot of green. Absolutely. On expiry day, yeah. Yes,
Tamanna, absolutely. Bank Nifty, the only saving grace. In fact, things would have been much worse had Bank Nifty not really done what it's done today, 1.2% higher, and we'll probably talk about that as well. But onto broader markets, the Nifty mid-cap down around 0.9 odd %. The Nifty small cap slightly better in relative terms, down around 0.5% thereabouts. So that's how the broader market, at least on the benchmarks in terms of broader markets, is playing out. But let's talk about some specific stocks, because there are some very big movers within the BSE 500 top gainers, top losers list. Let's pull those up. A lot of the list dominated by names in the IT sector. Let's look at the losers first, because the breadth of the market weak and skewed towards losers. So let's talk about some of those. Blue Dart yesterday did very well in trade. Today getting beaten 5% lower, some bit of correction coming there. You're seeing Glenmark Pharma, Abbott, Laurus Labs, so some pharma names as well under pressure outside of something like a JM Financial, probably one of the very few names in the financial services space in the red. Torrent Power, 1.5 gigawatt order win if I recall right. HEG Graphite, both up 9% nearly. And on the back of course, the top graphite manufacturer in the world hiking prices by 20 odd %. So some of those are big movers. Let's pull up and see what an REC is also doing. Plenty of moves within that segment space. REC over the last month or two has not done as well. Of course, flat in trade now as we speak, even though it was higher by around 2 odd %. In likely the announcement being that there's an issuance, and it's a rare one. REC has planned to issue deep discount bonds company plans to hit the corporate bond market in the next fortnight or so. And we are in exclusive conversation with the Chairman Managing Director Vivek Kumar Devangan. And actually Vishwanath Nair is leading that conversation. So let's quickly go in, dip in, listen into that conversation.
Some kind of indication globally, hopefully that will translate into a lower cost of funds in India as well. I just wanted to get your viewpoint, as a company that is in the leverage business, how are you looking at cost of funds evolving?
We hope that going forward the cost of funds may come down. We are waiting for US Fed rate, which is likely to be announced today. And we have kept our borrowing mix, judicious borrowing mix. We keep raising funds through corporate domestic bond. We do take domestic term loan from the banks, and we also take external commercial borrowing, and our 54 EC bond is the cheapest source of fund available. So we keep a judicious mix of our borrowing profile so as to not depend on a single source of borrowing.
So just for my understanding, sir, so if a company does, such as yourself, does decide to go down the deep discount route, eventually when the rates do come down, does that not pose a bit of a mismatch on the cost front?
Yeah, that's what I had told you. We have not taken a call on this issue. We are exploring all the available options, keeping short-term, long-term, medium-term requirement or fund requirement, and we will take action or decision accordingly.
Okay. There was also a statement to the exchanges which talked about REC signing a large number of MOUs, specifically in the renewable space. You signed about 1 lakh crore, or above 1 lakh crore, about 1.12 is what we learned from that statement. What is this focused on? How exactly are these MOUs going to be implemented, sir?
This RE Invest was organized by Ministry of New and Renewable Energy, and REC has given a letter of commitment that is called Shapath Path to MNRE, stating that we intend to increase our renewable energy portfolio to say about 3 lakh crore by the end of 2030. In this direction, we were able to sign MOUs worth 1,12,000 crore with various companies. With these projects pertain to solar, wind hybrid project, storage solution, pump storage hydro projects, battery energy storage projects, C&I operations, electric mobility, green hydrogen, green ammonia, solar module manufacturing, wind turbine manufacturing, entire gamut of the green projects we have covered in these MOUs.
Okay, fair enough. There's also the entire EV ecosystem that you're looking to finance at some point in time. I think discussions for that are still on, according to that statement that you issued.
Yes, we have already financed about 10,000 electric buses, and we are looking for another 40,000 electric buses to be financed. It will depend on the state transport release, which are inviting bids from the prospective OEMs and the operators of the electric buses. Once their agreement is signed, then we'll consider financing those electric buses also.
As a lender, when you're looking at the EV space...
Okay. So that was my colleague Vishwanath Nair in conversation with Vivek Kumar Devangan of REC, and the deep discounted bonds that they're issuing in focus. But really, what is in focus this afternoon is the Bank Nifty. Remember, it's expiry day. The Bank Nifty was expected to trend on the lower side. 52,000 levels was what was being expected. It's surprised with an upside, and how? Nearly 600 points up. 50 to 780, 790 at least on the Bank Nifty. And Hersh, this is something that we've been discussing. In fact, you did a piece yesterday on India Market Open where we were talking about the trajectory of the Bank Nifty ahead of the Fed meet. I mean, we focus on IT from the perspective of Fed decisions, but if you are going to see funds returning to emerging markets, Bank Nifty and the constituents of the Bank Nifty are possibly going to be the first call.
Inevitably, Tamanna, because and it comes on the back of the fact that the Bank Nifty has severely underperformed the Nifty. So you've seen the Nifty Bank give just about 12.5%, 13% returns over the last 12-month period, while the Nifty 50 has given 25% returns. So that's a severe underperformance. The Nifty Bank is also the second worst performing sectoral index in the last 12 months outside of Nifty Media. So outside of Nifty Media, it's the top or the worst performing index. And so in terms of large indices, it's a huge underperformance in that sense. And when you're looking at Nifty 50 constituents as well, 4 out of 5 worst performers on the Nifty 50 are lenders. HDFC, Kotak, IndusInd featuring on that list along with Bajaj Finance, which has had a very strong move today, of course. So excluding today's move, 4 out of 5 of the worst performers on the Nifty 50 are lenders. And just in terms of what the concern areas are, deposit growth is clearly a concern. Regulatory overhang, we've seen a slew of action by the RBI. There's a draft paper on LCR also sitting on the sidelines. If that comes in, will further accentuate some bit of pain on margins. And asset quality has started to slightly worsen in select pockets starting Q1 FY25. We've seen that, right? And therefore, some of those pockets are concerns which have weighed down. But when you're just looking at the way valuations as well as the positives are, first, credit growth extremely strong, favorable macro expected up ahead, and valuations. That's really the key for me. You're seeing SBI, of course, at 1.5 times book, but outside of that, IndusInd, HDFC, Kotak, Axis, ICICI, despite ICICI trading at 2.8 times, you are still at a significantly lower value to the 5-year average that banks have been trading at. And analyst expectations too quite bullish where banks are concerned, especially the top 2-3 are expected to do very, very well. Mid-teens to 20% kind of return expectations.
For the entire space, so yesterday, of course, I was speaking with the management of Chola, and this is something that they said as well, Hersh, that the positive impact of rate cuts over here will be another quarter away.
Yes.
So quarter 3 is going to be the magic moment in that sense, when you will have festive demand, maybe push up, more loans as well as margins improving. So we'll wait and see. But let's get Ruchit Jain and Deven Choksi in on the conversation. Welcome to both of you and great to speak with you this afternoon on NDTV Profit. Ruchit, let me start with your take on the Bank Nifty because everything's about the Bank Nifty this afternoon.
Yeah, hi, very good afternoon to everyone. Well, definitely there has been some sector rotation seen today where, the outperformers such as IT, pharma, some profit booking has been witnessed over there. But the banking was one of the space where relative, I think the underperformance was there compared to Nifty if we compare with the benchmark index. And due to that, the risk reward ratio has been more favorable in the banking and the financial space. I think that's the main reason why we have seen a good outperformance in the banking names, and especially this is led by the private sector heavyweights, which usually has much better weightage in the index. So I think the near-term trend remains positive. So we may see that Bank Nifty also clocking new record highs, which should be seen as a catch-up move to the recent underperformance.
Okay, so what would be your call on the Bank Nifty right now, Ruchit?
So my call would be to go long on the Bank Nifty index as well. One can initiate on some dips towards that 52,500. Where some put writing has been seen today, so that would act as a support. Now, stop loss should be kept below 52,200, and if it continues, then the previous swing highs were around 53,350. I think one can expect target somewhere around those levels.
Okay, Deven, your take on kind of resurgence in banks, and I'll come to you on the IT pain in a bit, but let's talk about banks for a while. And from the point of view of the big event that we will see in the next few hours, do you see that banks will be the biggest recipients of any largesse coming from foreign funds?
Yeah, so good afternoon, Tamanna. Well, on one side, with the rate cut coming in, which is a reality, this entire process, in my understanding, would probably be carried out over a period of 6 to 8 quarters. Generally, in a hike cycle also, I think you carry out the hikes till 6 quarters or 7 quarters. And in a fall cycle also, I think you basically bring down the rate of interest in 6 to 8 quarters time. Given that possibility that we are now going to be experiencing, now variety of influences will come in the books of the banks. On one side, I think they would have the mark-to-market credit from the treasury portfolio, particularly the large public sector banks. On the other side, with the fall in the cost of the money, is also going to help them in building better amount of margin eventually. So in my viewpoint, I think this is going to be a shift, which is from whatever we have seen up till now to that. I think now we are going to be seeing a shift, and that's where probably I think there is going to be a little bit of more exuberance, a little bit of more confidence, a little bit of higher allocation of money to the sector. At the same time, the country's credit growth is growing and it is picking up well. Also because of the fact that the various programs of the government, be it in the area of infrastructure, be it in the area of industry, be it in the area of social infrastructure, each of these programs are demanding higher amount of offtake of credit. And that's where the role of the bank is becoming more and more prominent hereafter. In my viewpoint, larger the size of the bank, better would be the visibility of earning going forward in this kind of a situation. That's where you are seeing the right shift right now happening into the banking stocks with the sector rotation taking place.
Yeah, and no wonder that HDFC Bank is one of the biggest recipients. Of course, Shriram Finance, Bajaj Finance, the NBFC buzz is also very, very interesting. All right, let's come to the stock of the day. The BSE has hit a record high in today's session as it extends its win for a second day in a row, charting an over 80% surge in less than 2 months. But what really is the reason for this BSE run-up, and is it making any sense? Hersh is telling us what's working and what's not for the company.
Well, not just that, it's been a 3x in a year kind of a story, the BSE stock, and of course much more in 18 months when you're looking at it. So let's quickly look at the bull versus bear case and try and balance it out, try and see what's probably what one also needs to be cautious about with the kind of run we've seen. Of course, benefits from financialization of savings. It's a duopoly industry where BSE is just one of two players, and therefore clearly it will benefit from that trend. But it just has a 10% market share in this duopoly, and therefore currently all advantage lies with the NSE, which is the other player. In terms of market share as well as in terms of robustness of the platform, NSE in that sense is slightly tipped and has a bit of an advantage in that sense. Let's quickly look at the other piece. Products are growing. Now, BSE has invested in some new products as well. On the options front, of course, there is a bit of regulatory advantage which has come or been thrown BSE's way on the options front. The other is, of course, your Star Mutual Fund platform, which has done exceedingly well for BSE, especially over the last year or so, and continues to grow well. But what we have to factor in is competition and how NSE is going to do to counter some of these challenges which are being thrown, and some market share which might get diluted as a result of this. Now, the third point is that when you're looking at margins, you're expecting margins to get better. In fact, profitability and PAT is going to double along with EPS. You're expecting an EPS of roughly 75 rupees per share in FY25, likely going to 90 rupees in FY26. So EPS is set to double from the sub 50 number. Of course, regulatory action further could also dent that profitability a little bit, and one would have to look out for that regulatory action because there's plenty happening in this space. Last off, just with regard to valuations and of course a potential NSE listing, that is obviously going to work in favor of the BSE because that has been the case. The oversubscriptions, the likely excess money will flow into BSE, and that's one obvious positive. But the stock is up 8x in the last 18 months, and trades currently at 40 times FY26. I'm not so sure whether the kind of valuation that it's trading at prices in some of that advantage already. It's up 16% in trade today. Just in terms of what analysts are viewing this, or how are they viewing it, the average of Bloomberg analysts is 2837 rupees a share, which is a 26% downside from here. Is it a time for caution? Well, we've just thrown it open, both the advantages or the bull case as well as the bear case. Leave it to you.
Yeah, absolutely, Harsh. That's an important one. All right, but in the middle of all of this, huge news coming in via NDTV. The cabinet has approved one nation, one election. Now, this is really big. Basically, the cabinet has accepted the proposal of the Kovind committee report. Remember, Ramnath Kovind, the former president of India, was tasked with putting out a report and heading a committee on the feasibility of one nation, one election. In fact, Amitabh Tiwari, political strategist, on the phone line with me, and we'll get my colleague from NDTV on to give us more details on this. But Amitabh, from what I recall, the biggest point of the Kovind Committee's proposals was that let's start with simultaneous polls. That's what one nation, one election is. Let's start with simultaneous polls for centre and state. And then 100 days later, you have local polls. How big is the fact that just days after Home Minister Amit Shah says it will come in this term, the cabinet clears it? What happens next?
See, essentially, it was one of the main planks or manifesto promises of the government and the BJP. And in Modi 3.0, since day one, the Prime Minister Modi and BJP have attempted to give a message of continuity, regardless of the numbers. So, in line with that strategy, the BJP is planning to go ahead with this. The cabinet has cleared it. Now, the bill will have to be brought into the Lok Sabha. Lok Sabha, NDA has a simple majority. In Rajya Sabha also it has a simple majority. However, the opposition parties are pretty opposed to this idea, and of course, since it's a big move, and it has not only political but economic, social, psychological, various other impacts. So we'll have to see how this pans out in the Lok Sabha and Rajya Sabha. We've seen the Waqf bill has gone to a JPC, so whether this goes to a JPC, whether this requires a constitutional amendment, I think it would. All of this will now have to be taken into consideration.
Now, Amitabh, as far as I understand, you need at least 18 constitutional amendments. I think that's in the Kovind report as well. You need at least 18 constitutional amendments to bring one nation, one poll into place. Some of them will have to be ratified by state assemblies, so it's a long process. The cabinet approving it is step one, but it's quite a bit of process till it happens. Now, in terms of a constitutional amendment, explain that for our viewers. You need a majority in both houses and 2/3 of majority of members present. How does that work out for the current government in terms of numbers?
Yeah, so essentially BJP or NDA has just about half of majority in both Lok Sabha and Rajya Sabha. In Lok Sabha it has 293, 294, and in Rajya Sabha it has half or a simple majority after the by-polls recently. So it means that it would require at least some regional parties from the India bloc fold to come out and support it.
Okay.
Then only it will be able to first pass it in Parliament, which is both houses of Parliament.
Right.
And
Just one second, Amitabh. I'm just going to ask you to just hold on for a second. Aishwarya Jain is joining me from NDTV 24/7. He's broken that story. And remember, we're going to be hearing from a press conference after the cabinet meet at 3 o'clock, so just in a few minutes from now. But Aishwarya, tell us what you're hearing. Do we have any more details on what the actual implementation looks like, or is this just step one of accepting the proposal?
Well, I can tell you at this moment, Ashwini Vaishnav has just arrived and even briefing the media as far as the approvals given by cabinet today. The meeting can happen at Prime Minister's residence at 7 LKM. And yes, of course, it was the Prime Minister Narendra Modi 3.0, the government's agenda that they need to pass the Kovind panel report in 100 days. And today, the Kovind panel report had been brought up in the cabinet that was approved by the cabinet. And yes, this is the first step. Of course, from here on, the bill will be taken in the Lok Sabha to pass. And we have been told that the alliance partners like JDU, TDP, LJP had already given their nod for one nation, one election. They are with the government, and the government on their side is certainly, very confident that they are going to pass this bill in Lok Sabha and Rajya Sabha. The work will begin from here because this needs constitutional amendments. This needs to be passed from the state assemblies as well. And therefore, the reason perhaps after the delimitation process that was done, it was the Kovind panel report who suggested that, from here on, the further process will start. The government is very confident and they are eager to bring this. Certainly, Prime Minister Narendra Modi and Amit Shah, both the top leaders have stated not once but several times in the past that one nation, one poll is in their agenda, and they are ready to bring into the fray the practicalness, the practicality, and the logistics is something that needs to be sorted out. In this detailed report of the Kovind panel, it is there, and the government will start working from here on.
Okay. Aishwarya, thank you for that. Amitabh Tiwari, the biggest question now is that how are allies feeling about it, key allies of the BJP?
So I think as Aishwarya said that JDU and LJP are in support of one nation, one election. So first, the BJP, since it's an NDA cabinet meeting, so we can assume that the allies are on board. And even if they are not, then the BJP's first step will be to bring the key allies on board. And then we have to see whether it goes on for consultations or brings the bill into the Parliament, Lok Sabha, like it brought the Waqf bill, and then sends it to a JPC. Because if there are 18 constitutional amendments, and some of the amendments also require state assemblies to pass or ratify those bills, then it is a long and arduous process. The first step has been taken in the cabinet meeting. Now we have to see whether the BJP adopts a consultative approach. It reaches out to opposition parties, holds meetings, or it directly goes to the Parliament and processes the bill for approval, and then takes steps as required, because it doesn't have the two-third majority in both houses of Parliament.
Okay, so that's what's important as well. Thank you for that, Amitabh Tiwari. They're breaking it down. So this is step one. It's an important step. Will there be now support coming from the India bloc for this? Remains to be seen. What does the TDP say? But of course, before that, we'll wait for the actual cabinet briefing. We'll take a very short break. When we come back, you'll hear from the cabinet as well on this. But we also give you closing strategies, because remember, big day for the markets ahead of the Fed meet. We talk about IT, top sectoral loser, and BTSC strategies. A lot more on the other side. Come back.
Okay, back to markets. Thanks for staying tuned to India Market Close here on NDTV Profit. Major talking point in today's market has been the IT sector. Well, it's come out as the top laggard, of course, down 3% and clearly under some pressure. Rucha is here to explain what's led to this, at least to a certain extent. Rucha.
CS is down about 4% in today's trade, and it has hit a 1-month low. Now, there's one news on the back of this wherein most of the analysts on the street are hearing from the management about the second quarter FY25 guidance. Now, mind you that TCS does not give quantitative guidance, but it only provides a qualitative one. Now, TCS has mentioned that, the North America space and the BFSI, that is the banking space, is slightly under pressure. Now, banking space is the space wherein most of the IT companies get majority of its revenue from. Now, it is also talking about Q2, which will likely be soft, and most businesses therefore expected to come from India in the second quarter of FY25. Now, the growth and the deal wins which were won in the first quarter are likely fizzling out, is what most analysts are saying that they have heard from the management, and hence this is the one which is might be dragging the stock down. But there's also this Accenture news which came in about yesterday post market, wherein it is shifting its promotion cycle to June from December. Now, mind you that most of the clients, prepare their budget for the calendar year in the month of December. Hence, shifting a promotion cycle to June, might give a better clarity on how much spending is to be required on those employee costs. So, a lot of bit around the demand environment as well, wherein most of the management mentioned about seeing green shoots. But again, a note by Citi says that LTIMindtree also told them about the green shoot that they are facing, but these green shoots might not turn down to revenue. So, giving you an overall picture of the demand in IT, likely stable, but still not good enough to have a revenue growth in the rest half of FY25.
Okay, thank you for that, Rucha. So, 3 reasons why IT companies are trading lower today. And none of them really seem like they might change anytime soon. Okay, I might put the Citi note on the side for now. But let me come to Deven Choksi on the view on IT. We spoke a short while ago, Deven, on the view on banking. Quite the reverse for IT, isn't it? And especially what Accenture is saying, does that stand out as a warning sign for you?
Well, I guess, Tamanna, I think there are a few things which are happening in the IT space, and I think what we are observing, those who are with a niche play in respective space, say for example engineering R&D space, their customers, they want them to produce a solution. Say for example, I think the companies which are producing the platform for using under the artificial intelligence, I think they would have a niche play for the user class of industry. So that particular change is definitely not going to work against, I think, most of the IT companies. That is what I believe. At the same time, I believe that the model is swiftly changing to the platform as a service. So PaaS kind of model is emerging very, very clearly for most of the users, customers as well of the IT companies. So as a result of which, some number of headcounts are going to be changing from coding to the computing side of the activity. Now, these are some of the profound changes which are happening. Likes of Infosys, likes of TCS have always suggested that how many number of headcounts have actually started reskilling themselves under this environment. So you can't be painting this particular thing at the same brush, for across the board for all the companies. Some of the niche companies will definitely have better business to talk about. Some of the generalized companies will probably have some amount of, I think, near-term hiccups in the entire activity. That is how I look at it. Maybe the IT as a sector, as far as the stock prices are concerned, is best bought when I think the stock prices are corrected or down. I think for 15% kind of a return in a year, I think you really do have to look out for the corrected stock prices, and that's where probably you can make money out of it.
All right. So looking at those prices which have really corrected, not quite too many in terms of options they went by at this point. But Ruchit, let me come to you with regard to technicals. What's, in your view, really led to this kind of fall, and what should one expect going forward?
If you look at recently last 3.5 months, the IT sector has seen a one-way up move. So if I look at the Nifty IT index, then at the start of June, the index was trading somewhere around 31,500. And right now, in spite of today's correction, we are still over 42,000. So it's just that the short-term momentum readings are overbought, and hence we are witnessing a corrective phase just before that event of US Fed interest rate. So I think as of now, it should be read just as a profit booking or a correction within an uptrend. We could see some more downside towards 41,000, 41,200 mark, but this this does not seem to be any kind of trend reversal. So I think buy and dip approach should be kept for the IT names if one is looking from a bit medium term perspective, but not at current levels. I would wait for some more dip towards 41,000 on the Nifty IT index, where the risk reward ratio could become favorable again.
Right. Devenbhai, if I can come back to you, just with regard to the big event today, 25 versus 50, of course, the big question. But more than that, if one were to look beyond and one were to look at the impact of some of these rate cuts, as well as the possibilities of a soft landing or otherwise, how's the IT environment in your mind shaping up? Do you believe that there is likely to be, in case there isn't a soft landing also, can IT continue to do decently well like was expected at the end of Q1?
So I am a firm believer of, I think, the current change which is happening in our universe. And I believe that, I think, given the power of computing that we all are asking for, I believe that, I think, most of the Indian IT companies will be, I think, in a favorable positions going forward, because they have the ability to work out the solutions based on the use cases. So I'm not seeing a kind of a downside in the business. What I'm probably observing is that many companies who have not geared up to the requirement of the environment may probably, I think, may end up having some of the smaller order books or some of the smaller growth in the business. But rest of the ones, I think, which we have been catering to the exclusive class of customers, like I have been mentioning about the engineering R&D space particularly, where I believe that the mid-tier IT companies are playing predominant role in providing the solutions to their customers. They would be relatively better off as far as, I think, their business intake is concerned, inflow is concerned, and so would be their financial performance thereafter. So maybe, I think, the premium valuation era is gone, but maybe, I think, you'll have to buy stocks when the market gives you corrected price opportunity at given point of time.
All right. Okay. The other sector in focus is two-wheelers. Two-wheeler sales have consistently outperformed passenger and commercial vehicles in the last year. What's leading the outperformance? Puneet is joining us for more details. Yes, Puneet.
Well, thanks for that. So, it has consistently outperformed, as you rightly said, the four-wheeler industry. And going forward as well, we can see that it's going to drive the valuation of the whole auto sector completely. Now, when you look at, what's leading to this is, of course, the strong sales growth for the financial year 2025, starting April to August. We have seen roughly 8 to 13% growth from the likes of the legacy automakers, the Hero, Bajaj, as well as the TVS of the world. While Ola Electric has grown 66% in sales, it's still a very strong, growth, but it's coming at a very small base of about 1 lakh units sold last year. Now, specifically, when we move on to see the divergent view on the other side of the passenger vehicle makers, it's hardly any growth for the likes of Maruti as well as the likes of Tata Motors growing. Tata Motors actually reported a 3% fall in sales from April to the period of August, and only Mahindra has been one of the key outperformers here on the back of new launches. When you move forward and look at the returns generated by these two-wheeler companies in the last 1 month as well as the last 6 months as well, we can see that the sales growth has transferred into the stock price returns as well, especially in the last 1 month that we see the likes of Bajaj and Hero MotoCorp both outperforming the auto sector as a whole, driving the 16 to 20% return growth. Eicher Motors has been one of the most disappointing ones. The volume growth also we've seen has been lagging the other players, and that's reflected in the one as well as the returns. But what's surprising is the 6-month return has been decent around 29%. But the leaders here, of course, are Bajaj Auto as well as TVS Motors, both driving the sales growth of the company. Now, we look at some of the factors, what's worked for the company in this particular time frame. And the first one's, of course, the volume-led growth across the key segments, which have been driven by new launches by the companies. Now, we've seen roughly around 10 to 12 launches by all two-wheeler makers. And we'll see, how these are working out as well in transpiring to strong sales growth. And the other key factor was working is, the first signs of recovery in rural demand. Post Q1, the earnings conference call, both Hero as well as TVS management has said that the rural growth has been faster than urban, and this is the first time in 4 years that has happened. Strong rural growth has also grown faster, and that's also led to, newer models, especially in the 125cc segment that's worked, and that's kind of become the new entry-level segment, essentially driving the sales growth for all these automakers. Finally, the ICE as well as the EV scooter is a segment which has picked up both. And especially one of the key winners here is TVS Motors. They have the Jupiter, which has been, selling roughly 70,000 units per month, as well as the EV scooter is the iQube on the other side. That's been one of the key things to watch out for. But what to do and what's, to look forward to going forward from this is, of course, the acceptance of the new launches. We've seen 12 launches, as we spoke about, in the last 5 months. Dispatches have just started in the last couple of months. So that's going to be one of the key things to watch out for. Another thing is the growth in the festive period. We've seen 17% growth in the first 5 months for these two-wheeler makers versus just about 6% for passenger vehicle makers. And going forward, it'll be important to see what happens in the festival period. Finally, a couple of other factors are, of course, the valuations. While they have moved up and given the returns of roughly about 43% for Bajaj, as we spoke in the last 6 months, they're still favorable and not quite as to say out of whack for most of these players. We can see that, for FY26 specifically, for the likes of TVS Motors is one of the most expensive because it is targeting both the 125cc as well as the scooter segment, while Bajaj and Eicher Motors as well as are trading roughly around the 27 to 30 times. And despite the strong performance by Hero MotoCorp in the share price specifically, it's still just trading at 20 times price to earnings for FY26. So overall, while the outperformance has come in the last 12 to 18 months on volumes as well as stock price, the valuations are still not, completely out of whack. And specifically one line for four-wheelers, they are trading mostly around the 20 to 25 times price to earnings. So that's still discounting the less volume growth that they have. So overall, we can see, in this particular chart that the buy calls are still there for the likes of TVS and Bajaj Auto, while, for someone like a Hero also the highest with the 67% buy calls for the company. So really strong picture posted in the last 5 months. It'll be interesting to see what happens in the festive period. Back to you.
Right, thanks so much for that breakdown, Puneet. Devin Bhai, if I can come to you just with regard to the key point that I took away. Hero Moto has been a doubler over the last 12 months, still trading at just about 20 times. Any names that you like within this space, both from a value plus growth perspective?
Well, I think in order of preference, the Bajaj would always remain on the top. Hero would come. Hero and TVS can possibly come in second and third positions. My rationale is very clear. For Bajaj, I think the premiumization is the motto, wherein they are basically changing the fuel mix, and they are in process, they are basically getting higher amount of realization on per vehicle basis, which is driving the profit margin. Similarly, their most profitable product, which is three-wheeler, that particular product is definitely, I think, a winner because they have succeeded with the electric three-wheeler, and that's where probably the higher amount of margins are being talked about. The electric vehicle, the two-wheeler per se, is slowly and gradually, I think, is creating buzz in the marketplace. And as I see, in next 6 months to 12 months, I think they are likely to come up with another segment of vehicles in the two-wheelers, in electric vehicle space. So all in all, put together, Bajaj is likely to replace significant amount of existing markets with its variety of products, with EV, with ICX, and with also the blended fuel which they have actually brought in. In my viewpoint, I think that is where I position this company ahead of others. Of course, it has moved up. It may probably have some price correction, but otherwise, I think this remains, I think, very clear growth leader as far as the space is concerned.
That's interesting you say that, Devin Bhai, because just look at the CLSA note on Bajaj today, where they've retained and underperformed, set a target price of 7,000 rupees, which is a massive downside from where they are. And the concern that they see is basically cautious on the increasing competitive intensity in the premium motorcycle space. They're seeing growth moderation in the greater than 250cc segment, motorcycle segment, and saying it's growing slower than overall motorcycle industry, continued pressure in export markets. But just follow up, because you talked about Bajaj, and I'm sure you saw that note as well. Devin, you would still say in your rankings is Bajaj Auto on top, or how would you look at Bajaj Auto, Hero, TVS?
See, as I explained, I think the kind of change this company is bringing is profound.
Okay.
And as a result of which, they are cornering the market share in the premium motorcycle is extremely profound. At the same time, I think you have that export market, which is significantly large portfolio of your business. And given the situation wherein the overall global environment becoming more clearer now, with the war-related situation, I think working in the direction of peace, I would think that I think the Bajaj would probably have the advantage with the premiumization of product. And that's where I would like to bet on it, even though it may be slightly expensive valuation. But whenever the industry is shifting, the shift is taking place in the platform, the technology, I believe that I think you have got a relatively higher advantage when you are positioned well. So that's the reason for which I think I would remain more confident about the Bajaj. Price may correct, I think I am not worried about it. But the business outlook for the company is remaining more and more clearer to me as I see it. The new models which they are talking about, which we are bringing out, they are really, really good models. I think they are coming up.
Okay. So Deven Choksi, bullish on Bajaj. Just, I know we have to let you go, Deven, but I have to ask you about BSE, because as I'm seeing it, that stock is again 18% up. 17.5% up. And at the start of the show, Hersh put together a bull and bear case. But is any of it making sense to you? How are you looking at the BSE run-up?
So one point, I think the financial market intermediaries, they are not too many available in the listed marketplace. That is the first point. So there is always going to be a shortage of these people as far as I think the market is concerned. And there is always going to be the higher amount of requirement to add these people into the portfolio of the investor. Also because of the fact that the financialization of investment is happening at a very rapid pace. Financialization of assets happening at a very rapid pace. And going forward from $4 trillion economy to $12 trillion economy by 2035, if you are talking about 3 times growth in the economy, and if you are talking about similar 3 times growth in the market capitalization, the exchange business, the depository business, the custodian businesses, I think those are some of the businesses which are likely to probably have a natural advantage of having higher volume. And to my mind, I think as the government is talking about, I think bringing the insurance business on the platform of the stock exchange for effective distribution, to me, I think that could also become, I think, a very large component of the business provided to the exchanges. So I would remain distinctly confident about these companies, and probably the valuation wise, I think they may eventually go up. I think today the market is in a relatively good mood for which I think the valuations are scaling up. But otherwise, I think gradually they will go up in the journey of next 10 years.
Okay, thank you so much, Deven Bhai, for joining us today. It's been, as always, a pleasure having you here. We'll let you go on that one. Thank you, sir. But let's stick with auto, because Deven Bhai spoke about Bajaj Auto. It's up 127% over the last 1 year. But one of the stocks which has done phenomenally well, at least this week, is Samvardhana Motherson. Puneet is with us. Focus on, of course, the QIP, loan repayments. Puneet, what's in store?
Well, definitely, it's they have launched their QIP, and they've mentioned that the floor price is roughly around 188 rupees. Now, the last 1 year stock performance has been phenomenal for the company, and that's also one of the key reasons that the timing of this QIP is very essential. Now, it's come at a good time for the company, and according to Bloomberg, they are willing to offer roughly about 33 crore shares in this particular QIP, which translates to about 6,400 odd crores using the floor price of the company. Now, there could be 2 potential reasons for this particular QIP is what we gather. One could be to fund further acquisitions, but the likeliness of this outcome is quite limited, because they have done 5 acquisitions in the last 1 year itself. 2 of them were major. One was Yachio Industries for roughly around 960 odd crores. The other was Lumen Group, which was around for 520 odd crores. So they are integrating these acquisitions, and because of that, they've taken a lot of debt in the last 12 to 18 months. Because of that, the net debt to equity ratio has gone to roughly net debt to EBITDA ratio has gone to about 1.7 times, and they are looking to reduce that to 1 time. That's what they mentioned after the first quarter earnings conference call as well. Currently, the net debt amount is roughly around 16,000 odd crores. So they would essentially want to pair some debt with this QIP fundraise that they are looking at, and that would also meet the target that they mentioned. So the stock has been reacting positively over the last couple of days based on this floor price announcement that's come, but we'll still see the exact outcome, of the exact quantum that they are looking to raise from this particular QIP. Back to you.
Okay, thank you for that, Puneet. Samvardhana in focus. The other stock in focus is SpiceJet. And a bit of a pain point there for SpiceJet. Stock is down about 6%. Now, their filings have shown statutory dues of over 700 crores. The company has now responded saying that, this is something that they have put in the public domain, but it's nevertheless hurting the sentiment today. Aditya is joining us with more. Aditya, give us the details of that 700 crore statutory dues. But among that, what really caught my eye is the 135 crore figure that they owe in PF.
Absolutely right. So basically, SpiceJet troubles are nowhere close to the end now. Because now see, according to the latest filing that SpiceJet has put out on the exchanges, there is some data that I want to highlight here. The statutory dues in total are about 793 crores, out of which total unpaid dues are of 426 crore and 336 odd crore is the disputed amount. So apart from this, the dues include TDS of around 219 crores and GST of 71.5 crore. But one number which is to be highlighted here is 135.5 crores of PF that is pending. That this is the employee money, basically the money of employees that has not been paid yet by the SpiceJet. This is one important metric. So I will also read out what a company has written in that particular exchange filing. There have been delays and deferrals in depositing and payment of statutory dues by the company. Any delay in deposit of such statutory dues may lead to penalties or interest for delayed period and other adverse action by the concerned authorities. So basically it is very clear that concerned authorities in these dues may also take an action against the airline. So QIP is being raised. 3,000 crore figure has been put forth for the QIP, which includes 1,500 crore green shoe option. But now the question here arises is that this entire amount which the company would raise from this QIP would it be sufficient for getting the new fleet in? They have sent their employees on a furlough of 3 months, so they also have to get those employees back, and now this new thing has risen. So all in all, there is a lot of turbulence happening for SpiceJet.
Okay, and of course you saw the statement from the company as well. You know, SpiceJet has been one of those seesawing kind of stories that's really difficult to track now. 7% down in today's trade because of the statutory filings, but the QIP was seen definitely as a positive. Ruchit, as we're going into closing strategies, let's come to you on the BTST call.
So I'd recommend going long on Nestle from a BTST perspective. So relatively, I would like to recommend something where which is a low beta name considering the big event that lies ahead. So even if we see any kind of volatility there, I think the Nestle would be one good pick where the stock is on the verge of a consolidation breakout. And the risk-reward ratio is also favorable because the stock has not seen any kind of run-up recently. So at current levels, one can go long with stop loss below 2,540, expecting targets around 2,650 to 2,670.
Okay. Varsha is also meanwhile joining us. Remember, there's a whole host of cabinet announcements that have been made, including a fairly significant amount announced for fertilizer subsidies. You're already seeing some of the fertilizer stocks running. Let's pull some of those up. RCF, Deepak Nitrite, FACT. Those fertilizer stocks are completely zooming after that cabinet allocation. What are the details, Varsha?
Well, Tamanna, all the fertilizers company, if you see past quarters, they were facing issues when it comes to their financial numbers as well, because the raw material for them was increasing, but there was no subsidy provided by the government or low subsidy provided by the government. But now, Cabinet has approved subsidy under NBS at rupees 24,475 crore, and the government subsidizes fertilizer price so that farmers do not bear the burden of market movements. Now, under nutrient-based subsidy scheme, NPK fertilizers are made available at farmers at subsidized rate. Now this aims to reduce financial burden for the farmers. Now all the fertilizer companies will be gaining. You are seeing that Deepak Fertilizers, then National Fertilizers, Chambal Fertilizers, then all Paradeep Phosphates. All these companies will be gaining because the raw material prices though are increasing, but the subsidies are also increasing. So the margins for these companies will improve going forward.
All right, so some margin improvement expected on the back of those subsidies coming through, and you can see some stocks, fly away a little bit on the back of that. But let's ask quickly take stock. Ruchit, if you can give us your views with regard to some of these, Deepak Fert, Coromandel, you're seeing good traction while we are very close to close on some of these counters.
I think all the stocks within the sectors have seen a good volumes of late, especially in today's trading session. But if I look in terms of risk-reward ratio, then RCF is one stock where the prices have recently seen a correction from the swing high of about 240 to below 200 now. So the risk-reward ratio is quite favorable, as the stock is also hovering around its 100-day moving average support. So if one has to take any fresh positions within the fertilizer space, then I think one would be the RCF, where at current levels also one can go along with stop loss below 182 for a potential up move towards 210, 215 again. And Chambal Fertilizer is another name where we have seen a decent consolidation in last 1.5 months. But one thing to note down is that in this entire consolidation phase, we have not seen any kind of volume-based selling. So usually whenever the prices go up with good volumes and on corrections if the volumes are low, then those are good signs from a midterm perspective. The only thing is that the breakout has not yet been done from that consolidation, which is above 530. So one can keep this on watch list. Any breakout maybe next 1 or 2 trading sessions above 530, one can then create fresh longs in Chambal with stop below 510 for potential targets around 570.
Okay, thank you so much for that, Ruchit. Fertilizers in focus. Earlier in the day, you had some railway companies in focus. The capex flow is really coming back into vogue as we go into market close. Less than a minute and a half. Let's see where the Nifty is now settling in. The cut is getting slightly deeper, about 70 points odd lower on the Nifty. The Bank Nifty, though, is raring to go, nearly 1% up. Let's just pull up the line chart for the Bank Nifty before we close off for the day's trade, because really the entire story, frankly, is on the Bank Nifty and doing fabulously. Come off its highs, but considering the kind of pressure we're seeing, sectoral rotation is very clear on the Bank Nifty. I want to pull up the Nifty IT just for a second and look at how bad it has become for the Nifty IT, and clearly the cuts are deep, 3% down on the Nifty IT index. Let's pull up the heat map as we go into the last odd minute of closing or so, and it gets worse for TCS. HCL, unfortunately, is joining the pity party, as is Infosys, Tech Mahindra and Wipro. Nothing much has changed here, more red than green. The advanced decline ratio will also show you that, Hersh, because even the broader markets are not faring any better.
Yeah, breadth extremely weak, Tamanna, in trade today, even as we come closer to close. It's improved a wee bit, but very, very marginally in terms of the breadth. Let's pull up the mid-cap 150, see where that one is settling in at. There you go, it's around 0.8% lower, just off the day's lows. So
even worse than the Nifty, broader markets have fared worse.
Yes, broader markets have fared worse, and the Nifty small cap relatively better than the mid cap, 0.5% odd. But again, just off the day's lows. Will be an interesting day and rest of the week, Tamanna, especially given the fact that there's a macro event, a huge macro event in focus. Yeah. Let's pull up the BSE 500 just to kind of cap this off. And there you go. So graphite.
Graphite, you've been tracking that. What's the reason why graphite has been running?
So the largest graphite player in the world has hiked prices by 20%, and that's likely the move on the back of that. But a lot of IT seen here. Blue Dart cool off after yesterday's rally. So most of it being IT, of course, Sona BLW being one of those, and JM Financial being the other one, which is standing out. Yeah, but on the flip side, I again see another Bajaj Group company there, Maharashtra Scooters. We've regularly seen that feature, but outside of that, even Bajaj Finance has done fairly well in trade today.
Bajaj Finance has done well as well. You've seen fertilizer stock spike towards the end of close, and perhaps that continues tomorrow as well. But a bit of a reset for tomorrow, in the sense, a lot depending on what you see at midnight tonight. 11:30 p.m. onwards, you will have coverage on NDTV Profit of what Fed Chief Jerome Powell says. Will it be a 25 basis point cut or a 50 basis point cut? In either scenario, what should you do? You need to come back here tomorrow morning on India Market Open. But for now, from Hersh, me and the entire team, thank you so much for watching.